Hey everyone, it's Daniel here from etfs. Hope you're all doing well. So, slavery to debt, being a slave to debt, looks like the possible or very likely outcome for many households, for much more households, for a very, very long time. Not saying that it doesn't exist today, but it looks like it's getting worse and worse and worse. How so? Well, just recently, I think a week or two back, the FHA, Federal Housing Administration, basically greenlighted a 40-year mortgage, which is great in terms of your monthly payment. Instead of 30 years, you extend it to 40 years and you pay less in terms of your monthly. May not be such a large amount in change, maybe for some, but definitely it helps the households get the mortgages that they need to purchase a house. So definitely this is one way of fixing your problem if the mortgage payments are, a pain and is affecting you, especially with the higher rates and the tightening and the labor market and the markets that could see a hard landing, especially the economy. So definitely this can help out. However, don't forget one thing though, that if you're paying interest payments, interest on your loan, on your debt amount for 40 years, you are basically for a very long time a slave to the bank and making the bank richer, right? Don't think that the liabilities and the debt you have, especially on a house, is an asset. It's really an asset for the bank. It's really the winner who's here are the banks or the mortgage lenders and the mortgage agencies, right? They're the winners out there because they're earning more interest off your 40-year mortgage. Now, if you just do a calculation, right, how much interest payment you pay, even with the 30-year, right? This is not a new concept, that I'm unveiling here, but it's a reminder that whether you were on 30-year or 40 years, if they, invent 50 years, 60 years, 80 years mortgage, it's basically a hook onto you being a slave to the bank because you'll be paying a lot in interest payments over those years. Now, if you can shorten it, obviously the monthly payments will be much more. It will be a little painful, but at least you're not burning so much in interest payments as compared to 30 years or 40 years. Now, this is very interesting because you have the FHA basically approving this because they know that the Fed went out on rampage and they had to raise rates to bring inflation down. And if they don't stop and they continue on this course, or if they keep rates higher for longer, or QT for longer, then a lot of households, a lot of people are going to feel the pain. If there's job layoffs, then guess what? If there's job layoffs and people will come in and say, hey, I can't pay my mortgage, there'll be defaults, and then there'll be problems again in the housing market. Maybe not exactly like 2008, but definitely there will be problems there, which a lot of the banks and the lenders would feel. They would be left with no payments, they would be left with maybe losses, etc., especially with the commercial real estate that is under a lot of scrutiny from people out there, investors, the online community, social media, etc., and the Fed and the government and so on, looking at this investment, thinking that, hey, this could be a big risk, right? And if that seeps into the residential market, then there's got to be a way to mitigate those losses or to protect people, which then why we see this 40-year mortgage come out. Now, again, this is just the signs that are out there showing you that, hey, stress is there. The FHA is saying that, hey, we need to get this out and rolling, because if we don't, then this could be a disaster for the economy and for a lot of these lenders, right? Now, will it do the trick? Will it still help people? Well, we'll see, because when you look at statistics out there about the amount of citizens that have a cushion of savings, it's very, very slim. And the amount of credit, consumer debt that people have, and hardly any savings. Well, if you lose your job, no matter if you got to pay your mortgage over 40 years, 50 years, 60 years, it's still going to be a problem. And if they especially if they can't make those payments, no matter what the time frame is. So really interesting. Check it out. I'll leave the article in the description for you to read up on it. Let me know what your thoughts on this 40-year mortgage. Will we see, the time frame increase down the road, 50 years, 60 years, and so on? Will things get worse and worse? Will we start to see true definition of the haves and the have-nots, right? With especially if we get a hard landing, especially if we get all this money printing from a hard landing, and we see more and more cash deteriorating. What do you guys think? What will happen in the coming months and years with all this money printing that's happening, and with inflation? So let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.